The whole life insurance industry has spent decades selling you a dream called infinite banking, become your own bank, build tax-free wealth, and look, I get the appeal. The idea of bypassing traditional banks, creating your own lending system, and building guaranteed wealth sounds incredible. But here is what those slick YouTube ads and insurance salespeople are not telling you. The math almost never works in your favor, and today I'm going to prove it to you. Hi, I'm Elizabeth, founder of Boss Budget Labs, and I want to start by telling you the thing your insurance agent is hoping you never calculate. When you write your first premium check, a massive chunk of that money does not go into your cash value. It goes into your agent's pocket. We are talking 50 to over 100% of your first year premium as commission. And if you pay $12,000 in year one, your agent might take $6,000 or more before a single dollar starts building your wealth. That is the business model. That is why they are so passionate about this product. And here is what that looks like over time. You commit to $15,000 a year into a whole life policy. Year one, you have maybe $3,000 or $4,000 in cash value. You paid $15,000. You have 3 or 4. By year 10, after paying $150,000 in premiums, you might have $80,000 to $100,000 in cash value. You are still underwater. After a decade, the internal rate of return on most whole life policies historically runs somewhere between 2 and 4% over 30 years. This is the guaranteed growth they sold you. Now, let me show you what happens to the same money somewhere else. $15,000 a year into a simple index fund at a hypothetical 7% average annual return, which reflects historical stock market averages but is not guaranteed. You have around $207,000 after 10 years versus roughly $90,000 in the whole life policy. That is a $100,000 gap, not a rounding error. That is a house down payment. That is years of retirement income. That is the annual cost of this product, and most people never see it because nobody shows them the comparisons. Now, the objection I hear every time is this: but Elizabeth, the stock market is risky. My cash value is guaranteed. And I want to take that seriously for a second because it sounds reasonable until you realize you are actually being offered. You are being asked to accept a guaranteed 2 to 4% return in exchange for giving up the potential to earn 7 to 10% and to pay a six-figure commission for the privilege. The guarantee is real. What they do not tell you is that certainty has a price tag, and most people never calculate what that price tag actually is until it is too late to do anything about it. There is one more piece to this that I need to address because it is the centerpiece of the entire pitch. You can borrow against your cash value. Your money keeps growing even while you borrow. You are your own bank. Here is what is actually happening. You borrow against your policy. The insurance company charges you interest, often 5 to 8%. You pay them to assess money you already paid into the policy. They are still the bank. You are the customer. The only thing that changed is now you cannot see the fee line because it is called interest on a loan instead of a charge. Now I want to be straight with you because unlike the people selling this product, I do not have a commission riding on what you decide. There are situations where whole life insurance makes sense. If your estate exceeds $15 million in 2026, the federal estate tax exemption, whole life can play a role in estate liquidity planning. If you have genuinely maxed out every other tax advantaged account and have decades ahead of you, it might have a place. If you need key person insurance in a business context, it could fit. But that describes a small fraction of the people who get pitched this product. Most people who buy infinite banking policies are not estate planning for a $15 million net worth. They are regular people who were shown a beautiful slide deck and never saw the comparison. I just showed you. So if that is you, if you're watching this and wondering whether the policy you own is actually building your wealth or someone else's, I have put a link in the description below to book a time with me at Boss Budget Labs. Because here is the real cost of this strategy. Every dollar sitting in a 2 to 4% whole life policy is a dollar that cannot go somewhere else. That money growing at historically higher rates, sheltered from tax, is what whole life premiums are competing with. And they are losing year after year, compounding against you. Not for years, for decades. So the path to real wealth is not complicated. Term life insurance if you need coverage, low-cost index funds for the rest. Consistency, low fees, and time. That borrowing strategy has historically built more wealth than infinite banking ever will. So if you want to build a plan that actually works for your numbers, book a time with me. And the link is in the description below. And don't forget to join my free school community. I've also linked that below. Now go put your money to work. Good luck.